Hello there, welcome to my channel. I am the Gen Z analyst, and on this channel, we deal with accounting and finance stuffs. We try to explain these stuffs and also apply them using the latest technology in finance and accounting, such as Microsoft Excel, Power BI, and Python. So, welcome to my channel. In this video, we are coming to start a series on financial modeling and business valuation. This is going to be a full course on the topic or on the subject. And so if you are new to the channel, please make sure you have subscribed to the channel and also like the video if you found it useful. And don't forget to share with others so that they can also benefit from what you are coming to enjoy in this particular video series. Alright, so as I said, we are coming to start a journey. It's going to be a very long journey on financial modeling and valuation analysis. So at the end of the day, you should be able to prepare a full financial model using a set of historical financial statements and also prepare a business valuation to value the worth of any business that you may come across. All right, so that is what we are coming to deal with in this particular video. But before we start, we are coming to look at a refresher on certain concepts when it comes to financial modeling and business valuation. So actually, we are coming to learn the financial modeling first, which is the first part, and we will deal with business valuation, which is going to be the second part. So when you look at my pro forma document here, Excel document, you will see that after we are done with our refresher topics here, we'll come to the income statement tab, okay, and then we are going to deal with cash flow statement, balance sheet. We'll come to supporting schedules, which comprise PPE schedule, working capital schedule, as well as debt schedule. Before we move on to our business valuation, which are actually three. We have the discounted cash flow model, we have the comparative analysis, and then we also have the precedent analysis. So we are going to deal with all of these at the end of this particular series. So let's get started. So let's do a quick refresher. So we are going to look at an overview of some key concepts here. So we have first one being what financial modeling is, who the course, this particular series or course is for, an overview of the main components of a standard financial model, introduction to the components and elements of a financial statement, normalizing the income statement, and also getting started with our case study. So in this particular video, we are looking at financial modeling. So what is financial modeling? A financial model is simply a financial forecast of a business. So we are looking at how the revenue and expenses of a particular business will look like going forward. So when we look at the next 5 years, how is our expenses and our revenues going to be? That is what we are looking at when we talk about financial modeling. So the process of doing this is what we call financial modeling. So a financial modeling is simply the process, okay, of creating a summary of a company's expenses and earnings in a spreadsheet such as Excel or Google Sheet. You can also use Google Sheet for this, okay, and we use that to estimate the impact of the future events on the finances of a particular business. So that is financial modeling. All right, and it has many uses for companies. All right, and we are going to look at that. So that is simply what financial modeling is. Now, who is this course for? The course is designed for those who are interested or are into investment banking, private equity, financial analysis or financial analysts. This is also good for financial controllers, FP&A professionals, okay, accountants, students of accounting and finance, and related fields such as economics, mathematics. So all of these people, this particular course is good for you. All right. And also you who is not in any of these categories but is interested in venturing into any of these categories, this particular video is good for you. All right. So that is what That is 4. Then we have an overview of the main components of a standard financial model. So I have already referred you to the components that we have here. So the components are basically the 3 main financial statements, all right, which is the income statement, cash flow statement, um, balance sheets. We have supporting schedules, which comprise PPE schedule, working capital schedule, and then also we have debt schedule. All right, so those are the main components of a standard financial model. Then we are going to add the valuation tabs to these um, um, already existing tabs that we have seen. All right, so that is that for that. So now let's look at each of the income statements, and I said the income statement, the financial statements, and look at their elements. Okay, so as I said, the components of a financial statement are the income statement, the balance sheet, and then the cash flow statement. Now, the income statement takes into account the expenses and revenues of a particular business. So at the end of the day, in the income statement, we are actually calculating the net earnings, all right, the net earnings of the income statement. All right, so that is it for the income statement. Then the second one is the balance sheet. The balance sheet actually comprises assets, liabilities, and shareholders' equity. All right, so these are the main 3 main items in the balance sheet. We are going to deal with this into detail when we pick the statements one after the other. Then the elements of the cash flow statement are actually grouped um, into three main categories. So we have the operating activities, okay, cash flows from operating activities. We have cash flows from investing activities, and then we also have cash flows from financing activities. So that's the cash flow statement. Then the other supporting schedules are actually going to contain information that is going to be populated into the 3 main financial statements. So that is what we have there. Then um, we are going to look at normalizing the income statement. We are going to look at that in a jiffy. Then we will also look at look at our case study, which is Amazon. Okay, so we are going to look at Amazon.com Inc. Incorporated to model its historical financial statements and see how this particular business is going to perform over the next 5 years. Okay, so we are going to look at the historical performance of Amazon, and then we are going to model it for the next 5 years and see how the business is going to look at using some simplified assumptions and drivers. So that is what we have. So now let's look at the income statement. Let's look at the income statement of Amazon. Okay, but before we look at that of Amazon, let's look at the various elements of the income statement in detail. So as I said, the income statement shows a company's profit or loss over a specific period of time. All right, so this is to show how much a business is expected to pay in taxes per sale. And of course, this is reduced by the tax deductible expenses. So what we are saying is that the income statement shows how much sales or revenue we have generated and the amount of tax payable on these sales. But what happens is that the sales is going to be reduced by tax deductible expenses. All right. So what in a jiffy, what you are saying is that the income statement shows our net income, and this net income is actually our profit or total revenue less expenses minus our tax expense. So this is basically what the income statement shows. All right. However, in practice, the income statement is more complex than what we are seeing here. All right, due to complex business transactions that are often undertaken. So, as analysts, we need to identify the main elements of the income statement to understand and or facilitate our analysis. All right. So, for this reason, one should always categorize the income statement line items into 9 major categories. All right, so what this simple element you are seeing here is actually going to be categorized into 9 major categories, and we are going to look at that. So the first category is our revenue, or you also see sales. All right, so that's the first one. The second one is our cost of sales. Now, I'm going to fundamentals. So if you are already familiar with these fundamental concepts, then I would encourage you to skip this particular video, or you can skip it to a place where you are willing to follow. But as much as possible, I would like you to stick with me so that you'll be able to understand whatever we are doing in this particular video, because I'm going to take my time to explain financial modeling in detail, so that when you pick any financial statements out there of a public company, you should be able to model that particular financial statement. All right, so that is what we are doing here. Now, the third component of or the third category of an income statement is what we call operating expenses. So we have operating expenses. Then we have other income. All right. Then we have depreciation and amortization. We are going to look at each of these items and their meanings. All right, so bear with me. So we have the next one being interest. Okay, interest is made up of interest expense and income, interest income. All right, then we also have taxes, very important. We look at non-recurring and extraordinary items. Then we have distributions to owners and NCI. All right, so this is the major components of an income statement. Then, of course, you also have what we call earnings per share. All right, very important. So let's look at each of these items and see what they represent. So we have revenue. So revenue is actually the sales we have earned or realized over the period. So if you are a business that is involved in, let's say, the sale of clothing, when you sell your clothing, the amount that you are able to generate from your sales is what you call revenue. So revenue is the principal, the income from the major or the principal business activity of a particular entity or company. All right, so that is what we call revenue. Now, in order to generate this revenue, you may have incurred direct costs or expenses. Now, these direct costs of sales is what we are calling cost of sales. Others might call it cost of goods sold, what we call COGS or COGS. All right, cost of goods sold. So that is our cost of sales, is the direct expenses we incur in making our sales or generating our revenue. All right. Then any other expense we incur is categorized as operating expenses. These expenses are not directly related to our revenue generation, All right, so they can include lighting and heating, they can include rent, they can include other expenses that are not directly involved in our main business activity. Salaries paid to our employees and supervisors and all that, managers, these are all operating expenses. All right, so they are not categorized as cost of sales. So after we have gotten this, we'll have what we call other income. All right, so any other income apart from our income from our principal revenue generating activities is classified as other income here. All right, then we also have what we call depreciation and amortization. Depreciation is the amount that is allocated against the cost of an asset, that is a non-current asset that is used in our day-to-day activities of our business. All right. Now, depreciation is for tangible, non-current or fixed assets, whilst amortization is for intangible, non-current assets. All right. So that's the difference between depreciation and amortization. Then we have interest. Okay. So whilst we are operating our business, we may have borrowed money or lend money to others, outsiders. So the interest that we pay on these borrowed funds or lent funds, that is what we call interest expenses and interest income. So the one on the borrowed funds is what we call interest expenses, whilst the one we have loaned out to outsiders is what we call interest income. All right, so after this, then we also have taxes. All right, so the income tax, every business pays income tax except you are located in a free zones or you are on a tax holiday. That's the only time you will not pay taxes. All right, but ordinarily, every business must pay tax to the tax authorities. All right, then after that, we have what we call non-recurring and extraordinary items. These are income or expense items that are either one time or not pertaining to everyday operations. All right. So what happens is that such items can be found at various sections, okay, within a typical IFRS based or GAAP based income statement. So it is the work of a good analyst, okay, to identify these items and move them to the bottom of the income statement. This is what we call technically normalizing the income statement. So within the refresher section, you realize that I put here normalizing the income statement here. So that is what that mean by that. So you have to identify these non-recurring or extraordinary items and move them to the bottom of your income statement so that you can be able to have the core um, revenue and expense items within the income statement to work with. Now, the reason is that most often than not, these items do not really affect the income and expenditure of the company under consideration. And so this is what we do with them. All right. Now, how do you know they are non-recurring and extraordinary? Maybe for a 5-year historical period, these items occurred only twice, all right, twice in this 5-year period, or once, or at most 3 times. But where it is more than 3 times, occurring 3 times, then you know that it is not a non-recurring or extraordinary item. All right, so you need to include it in your normal lineup as we have stated above here. All right, so after that, then we have distributions to owners and NCI. All right, so these are dividend payments we make to our shareholders, equity shareholders, as well as non-controlling interest. That is the part of the company controlled by the owners of the parents. All right, so that is what we have here. Then this will give us an income, all right, another net income, which we are going to look at. Of course, all of these are going to have some subtotals, all right, which I have not included in our list here. They are all included. You have gross profit, we have operating profit or EBITDA, okay, EBITDA, that is earnings before interest, taxes, depreciation, and amortization. All right, so from items 1 to 4 here, usually gives us EBITDA. The result of these items 1 to 4 here is what we call EBITDA. Okay, we are going to look at that in detail when we are looking at our Amazon case study or its income statement. All right, so it is very important to note the structure of the income statement. Now, let's come to the Amazon case study. Now, I have already downloaded my Amazon income statement here, consolidated statement of operations, which is the income statement. Now, these have different names. Okay, you can have consolidated statement of operations. You can also have consolidated income statements. You can also have consolidated statements of profit or loss and other comprehensive income. These are all can use names that we can use interchangeably. All right. So when you see this, don't be confused. All right. So let's look at how I was able to obtain the financial statement of Amazon.com. So to be able to do that, you need to go to the browser. So I'm going to my Google Chrome. All right, so I'm right here in my Google Chrome. So when you come to Google Chrome, just type Amazon.com. All right, that takes you straight to Amazon.com, and you'll be asked to verify whether you are a human. All right, so I'm going to type these characters here: CUJKY, and that takes you directly to Amazon. All right, so I'm going to have that. Then when you come to Amazon.com, you have to scroll down. Scroll down. When you scroll right here, investor relations. So I'll click on investor relations. And that gets to know us section here, investor relations. Then that is going to open the investor relations tab for you. And then you come to the third item here, SEC filings. Okay, Securities and Exchange Commission filings, SEC filings here. So I'll click on SEC filings. And when you come here under the group section here, click the drop down and click on annual filings, filing year 2024. That is okay. Okay, so you have the 10K right here. Okay, you have the 10K right here. So we have the PDF section, PDF format, sorry. We have the Excel format as well as the HTML format. So what I did was to download the Excel format, okay, but for what we are going to do in subsequent videos, I would like you to also download the PDF format as well. All right, so we are going to use both. So download the Excel format and also the PDF format. Now, after downloading this, come to this particular, the filing year, under the filing year, and also select 2020. Download that as well. There is a reason I've asked you to do that. All right, so when you download these two items, the Excel one is going to open in Excel for you. When you come into Excel, it's going to open many tabs. All right, so what I want you to do is to open a new Excel workbook. Open a new Excel workbook and name your tabs, or rename that sheet income statement. All right, so rename that particular sheet income statement and go back to the 10K Excel workbook that you have opened or downloaded from Amazon, and then scroll through all the tabs. You will see income statement. So when you see income statement, copy the income statement information and paste it in your newly opened Excel tab. All right, and rename the Excel tab, the Excel workbook, rename it financial modeling. Okay, full course, so that whenever we move to the next item, we're able to add another sheet like that. So that is what I want you to do. So you are going to copy the income statement, as I said, downloaded 10K in the Excel sheet format into your newly opened or your newly created Excel workbook into the income statement tab as I have here. All right, so that is what I want you to do. So that is that. I'll leave this particular sheet in my video description so that you can download it as well and follow along. But as much as possible, I want you to follow the instructions I've given in this particular video so you can be able to do that on any other financial statements that you may want to work on. All right, so that is that about downloading or how to get the information we need. Now, when you come to the balance sheet, when you go to the balance sheet in the downloaded 10K file, Excel file, you will realize that the balance sheet only contains two historical years, 2022 and 2023. All right, so do is go to the second one which we downloaded, which is the 2023 one. If you remember, I told you to come to the filing year here and select 2023 and download that one as well. So when you come there, I want you to go and open that particular Excel file and grab the 2021 um, figures, 2021 figures there. Items, the individual items or the descriptions are the same. So I want you to just grab the figures of 2021, including the year, and come and paste it right here in column B as I have here. So that is what, or that's the reason why I asked you to download the 2023 one after downloading the 2024 one. All right, so grab that and come and paste it here. And as I said, I'm going to leave it, but you're not going to deal with balance sheet for now, so you can leave that for a later time. So let's continue with the income statement. So let's look at the income statement of Amazon and see what we have here. All right. So as we have said, it's going to be basically the main content you have identified here. So actually, I can delete this now. So when you look at the income statement of Amazon, they are actually in millions of US dollars. So in US dollars, millions, except per share data. Okay, that's very important. Then we have net sales, all right, for the 3 years, 2021, 2022, and 2023. So we have net product sales. So actually, it has two revenue streams from products and then from services. All right, so that is what Amazon has. Then we have total net sales here, which is the addition of these two sales items. So actually, this is supposed to be equal to this plus this. Okay, so copy the formula across using Control R. All right, so I've done that. So this is also now. All right. Now remember, I didn't just drag everything here because we are going to calculate sum between these figures. So after you have done the income statement and brought it into your newly formed or downloaded income statement as we have in this format, I want you to create extra spaces between each item. Okay, as I have here. So create extra place. And how do you do that? You can just click on the item, come to the home tab, and then under the home tab, come to sales, the sales tab here. You see insert and then click on insert. When you click on insert, it's going to automatically insert another row beneath the item. Okay, so for instance, when I click here, it's going to create a row above. Okay, it's not beneath, it's above the item. So that is what we have there. All right, so I need you to do all of this for all of the items. Okay, create extra spaces between the items because you are going to calculate historical ratios for each of these items. All right, so that is what we have. Now I can bolden this using Control B. So select it and hit Control B to bolden that. Then we have our operating expenses. Now, the operating expenses is going to comprise cost of sales. Okay, so we have our cost of sales here. Then after our cost of sales, we have gross profit. So we are going to create a gross profit item here. And gross profit is actually our total net sales minus cost of sales here. And I can copy the formula across using Control R. Control R. So that is what we have there. So we are just inserting some extra. We are looking at the individual elements of the Amazon financial statements. So I'm going to bolden this. All right, so let's continue. So after our cost of sales, which is an operating expense, we have other operating expenses, and these include fulfillment expenses. Okay, we have technology and infrastructure, sales and marketing, general administrative expenses, other operating expenses, net. Um, we have total operating expenses. Then we have operating income. Operating income. Now, the total operating expenses is going to be equal to our fulfillment cost or expenses plus the technology and infrastructure plus the sales plus marketing. We have general and administrative plus our other operating expenses. That's going to give us the total operating expenses here. So let me undo that. All right. So it means that actually, let's do this total other operating expenses. So you have total other operating expenses. All right. So that is what we have here. So this is equal to so what we have here is that actually the figures we have here include the cost of sales. Okay, Amazon has actually included our cost of sales, but as part of our normalizing process, we are going to what exclude our cost of sales. So the amount is actually, so let's verify that when you pick this amount, cost of sales, and add your fulfillment cost plus technology and infrastructure plus sales and marketing plus general and administrative plus this, it will give you this particular item here. So I can copy the formula to the right. Okay, so you see that we have this right here. But that is not what we want. We want to exclude. So we want to exclude the cost of sales, all right, because that is a standalone operating expense. So I'm going to take away that part and click enter. And I can copy this to the right using Control R. So that is our total operating expenses. Then after getting our total other operating expenses, we are going to subtract the total other operating expenses from our gross profit to be able to obtain our operating income. Now, this operating income is also called EBITDA. Okay, we have EBITDA, or what we call earnings before interest, taxes, depreciation, and amortization. Now, this is going to be equal to our gross profit minus our total other operating expenses. Okay, then I can copy the formula across using Control R. So we have that. Now, after getting your EBITDA, there is an item here we call depreciation. We have depreciation and amortization. Depreciation and amortization, unlike other operating expenses which we have listed here, depreciation and amortization is usually separately, or is not usually separately listed as a line item in our income statement. So one way of identifying this line item is in the statement of cash flows. So when you come to your statement of cash flows, which you should have pulled from the downloaded 10K, okay, you should have pulled from your downloaded 10K, you have your depreciation and amortization of property and equipment and capitalized content costs, operating lease assets, and other. All right, so this is the figure here. So what you are coming to do is to copy this particular figure, come to our income statement, and paste them here. All right, so now that we have identified that depreciation and amortization actually exists and it is recorded on the statement of cash flows, or the cash flow statement, we need to identify the particular income statement item or expense item in which it is hidden. All right. Now, this is not obviously shown, so we need to what? Do some digging to be able to identify where it is located, in which of the operating expense items it has been recorded. So if we just treat this as part of our operating expenses items, then it's going to result in what we call double counting or overstatement of our expenses. So DNA is most likely hidden in one of the operating expense and items, but how do we know which expense item it was included? Now, you would remember that I told you to download the PDF format of the 10K. Okay, so although this is not easy to find, we can do a quick word search on depreciation in the 10K. Okay, the PDF format, I mean. So when you do a quick word search, it reveals that depreciation is included in technology and content. This particular technology and infrastructure, okay, it is included within this technology and infrastructure item within our Amazon income statement. Now, you should note that some, or it is common convention or convention to include DNA or depreciation and amortization within your cost of sales. All right, that is also done. Or any other, it can also be part of your general and administrative expenses. It can also be part of your sales and marketing expenses. All right, so it can be included in any of your expenses or your distribution expenses. So in for Amazon, it has been included within technology and infrastructure. Okay, that is what where our depreciation expenses have been included. So what do? We are going to subtract. It means that this item already contains these particular amounts. So what do? We are going to subtract them from these items. So I'm going to have double click, have my equal sign here, minus this item, and click enter. And then I'm going to copy my formula to the right. So these items now exclude our depreciation amounts. All right. So what I'm going to do is to copy this, okay, and then I'm going to paste them as values and not formulas. Okay, these are currently formulas. I want values only. So what do? I'm going to have Control Alt V. That opens the paste special box here, and the paste special dialog box. I'm going to pick values or V. Just click on V and click OK. So that is going to paste these values as values and not formulas. All right. So that is what I have there. So now that we have subtracted that from our technology and infrastructure, our operating income should change okay, because the total other operating expenses should also change. All right, so we have this control R that has dynamically changed. All right, so now that we have our depreciation and amortization, we can subtract that from our EBITDA to obtain what we call, so I'm going to insert a couple of lines here as well. So after obtaining this, we are going to have what we call EBIT, or what you call earnings before interest and tax. Earnings before interest and tax, and that is equal to our operating income, or EBITDA, minus our depreciation and amortization expense. So I'm going to copy this also to the right, Control R. All right, so that is what we have for depreciation and amortization. I hope you have gotten it. Then let's move on. So we have our interest income here. We have interest expense. We have other income or expenses here. So what you should note is that here we have put expense in brackets. Okay, so we are going to actually format all of these to put our expenses as brackets and our income as positives. Okay, or our expenses are going to be negatives and then our income is going to be positive. So we are going to do that later. So let's just continue to look at our Amazon income statement items. So we have other income expense, as we have already said. Then we have our total non-operating income or expense. So that is going to be equal to the sum. Sorry. So let me undo that. So this is actually equal to the sum of these three items. So we have the interest income added to our interest expense added to our other income or expense. Okay, so I have those three items. I'll hit enter and then I can copy the formula to the right. Okay, and then I'm also going to bolden this using Control B. All my subtotals are going to be boldened. Okay, I'm going to bolden this as well. All right, so that is what we have there for now. Then we'll have, after obtaining our total non-operating income or expenses, we would subtract that from our EBITDA or EBIT, okay, to obtain what we call income or loss before income taxes, or what we call EBT. So let me actually put that. That is earnings before tax. Earnings before tax. So that is going to be equal to our EBIT added to our non-operating income. Okay, that is why we are going to make all incomes. So this positive here means that this is what total operating income. The negative here means total operating expense. All right, so I'm going to copy the formula to the right using Control R. So we have that particular item there as well. Now, since this is a subtotal as well, I'm going to bolden that using Control B. And then we have our provision for income taxes. Okay, so that is what we have. Now we have benefits or provision for income taxes. So the ones in brackets are the expenses, income tax expenses, whilst the positive figure at the middle here for 2022 is our income tax benefits. All right, so that is it. Now we have to insert new figure there called net income. So I have my net income. So I'm going to call it net income from core operations. Core operations. All right, so studying this particular Amazon income statement, there are actually no extraordinary or non-recurring items. So I'm going to just name this net income, just net income. So that is going to be equal to our income before taxes, or EBT, earnings before tax. And then I'm going to add my income tax provisions. Okay, since they are negative, adding it is going to have a negative effect on that. So I'm going to have control R here. So this is our net profit for the period, net income or net profit, however you want to call it. So let me bold in this. And I'm going to reduce the decimal to 0 right there. And so that is what we have here. All right. So that's the net income statement there. Then we have equity method investment activity. All right, equity method investment activity. This is effectively non-controlling interests. Okay, so the profit we have made from our investments in um, other entities that are actually non-controlling interests. Okay, so that is what we have here. So we are going to add those to our net income here to get our final net income, okay, as reported. So this is net income or loss as reported for the entire group. Okay, remember this is a consolidated statement of profit or loss or income statement. So that is what we have here. So I'm going to copy the formula to the right using Control R. Then after that, we have this earnings per share and diluted earnings per share figures here. Okay, we are going to look at those. So it is actually our net income as reported divided by the weighted average shares used in calculating our EPS here. So for the basic is going to be this equal to this divided by the basic. So let's do that. This is going to be equal to this divided by the total number of shares here. Okay, and that is going to give us that. And then this will also be equal to our net income or loss as reported divided by the diluted number of shares there. So this is also that. I can select those two, select it to the right, and then copy to the right using Control R. So that is what we have there as basic earnings per share and diluted earnings per share. So that is our income statement. Okay, so I'm going to end it here for now. In our next video, we are coming to calculate our sales growth. We're going to make certain assumptions here as well. We are going to actually start with our financial modeling proper. So here we just looked at how to or understanding the income statement. First of all, how to download it from the company's website and also check for any items that are extraordinary, which we do not have in this case. So we have actually looked at the entire item here. Now, one final thing I want us to do is now that when you look at the statement carefully, certain figures are not formless, whilst others are formless. So in financial modeling, as a best practice, what we do is that we are going to format all the constants, okay, the hard-coded figures here, which are not formless, as blue. Okay, we are going to format them as blue, and then the ones that are formless are going to be formatted as black, or they are going to be left as black, as we are seeing here. So how am I going to do that? I'm going to select all the figures here, the entire section here, excluding my years, of course, the 2021, these are also hard coded. So I'm not going to include those. So I'm going to hit F5 on your keyboard. Is going to open what you call go to dialog box here. So this is the go to dialog box. And what you're going to do is come here and come to special. So go to special here. When you come to special, we are going to select constants, okay, and we are going to exclude texts, logicals, and errors. So we are going to only leave numbers checked. Okay, you are going to uncheck the rest, and then you are going to hit OK. When you do that, it's going to select all the constant figures within our selected area. Okay, so as you can see there, all the constants have been selected. So I'll come to my font color here under the home tab. Come to font color, click on the on the drop down menu there, and then I'm going to hit this blue color here. So I'm going to hit the blue here, and then it's going to format all my constants as blue. Now this is a financial modeling, a widely accepted financial modeling practice. Okay, so you should always do this. So this is how we are going to wrap up our first video on our video series. In our next video, we are going to calculate our ratios and also start our projection of the income statement. So do well to subscribe to my channel, and don't forget to like the video so that it can reach a lot of people as well. And don't forget to share with others so they can come here and learn what you are also learning. All right. So I'll see you in my next video.